Breaking news: US and Iran strike last-minute ceasefire. Oil prices drop. The headline flashes across every screen, from bustling Manila cafes to late-night Tokyo newsrooms. Anchor voices tremble with urgency. After weeks of missile strikes and naval clashes in the Gulf, an emergency ceasefire is announced. The world has been waiting, watching warships on live feeds, countenances tight with fear. Markets respond instantly. Oil prices, which had been climbing for days, suddenly plummet. Investors breathe out. There's a sense of temporary relief. Even the busiest trading desks pause to listen as news anchors detail the agreement's terms. The ceasefire is described as fragile and hard-won. Analysts warn this is not a celebration, just a pause. The fighting might resume at any moment. Tweets from political leaders echo, a step in the right direction, but challenges remain. Across Asia, sighs of cautious relief ripple through governments and markets. But in every capital, leaders know this calm is only temporary. The real test lies ahead. The days before the ceasefire were tense. Oil tankers bobbed nervously in the Strait of Hormuz, the world's most vital oil passage. Each day, new reports emerged of missile threats, drone attacks, and naval standoffs. Global energy supply felt just one step from chaos. In Tokyo, Seoul, Jakarta, and Manila, ministers met late into the night. Contingency plans were drawn up. Emergency energy meetings became routine. Families stockpiled fuel and groceries, worried about shortages and price hikes. Airline tickets soared as travelers rushed to beat possible cancellations. When the ceasefire was announced, world leaders quickly welcomed the move. Stocks rebounded. Energy ministers, haggard from sleepless nights, dared to hope for stability. For a moment, the world collectively exhaled, yet no one was fooled. The relief was real, but shaky. The markets calmed, but uncertainty lingered in every conversation, every headline, every government memo. The ceasefire brought hope, but not certainty. It is, as one analyst put it, a band-aid on a bullet wound. Guns are silent for now, but the reasons for fighting remain. Iran wants sanctions relief and guarantees for oil exports. The United States and its allies demand security for shipping lanes. Neither side trusts the other. Both have made only minimal concessions. No one is sure how long the quiet will last. The world watches, waiting for the next spark. Oil prices reflect this anxiety. They dipped, but not to previous levels. Traders know any new incident, a stray missile, a broken promise, could send prices soaring again. Memories of past Gulf crises haunt every prediction. It is a dangerous, uneasy calm. Everyone knows the risk. This pause could shatter with little warning, plunging the world back into crisis. International politics is about power and survival. Realist theorists like Hans Morgenthau argue that nations act out of self-interest, not ideals. In moments like this, we see that theory play out in real time. Countries are not waiting for peace, they are preparing for the next conflict. Japan and South Korea quietly increase their oil reserves. The Philippines reviews its military alliances. Indonesia's leaders talk of rationing and subsidies. Every nation puts self-preservation first. Realism says alliances are tools, not friendships. In the Gulf, each navy looks after its own tankers. In Asia, governments call for unity, but secretly plan to outbid each other for oil if things go wrong. The ceasefire is not built on trust. It is a calculation, a pause to regroup, reload, and reconsider. The world hopes for peace, but prepares for the worst. The ceasefire agreement is not a full solution. Ships can move, but only in convoys, and with strict military escorts. The US Navy coordinates passage, but Iran insists on close monitoring. Each side watches the other, ready to accuse at the slightest provocation. Iran's demands remain high. They want sanctions eased before making any real concessions. Western countries refuse, insisting on full security for tankers first. The talks are tense, fraught with suspicion. Insurance costs for shipping remain high. Some companies refuse to send vessels, fearing fresh attacks. Oil output is steady, but fragile. Any slip could freeze flows again. This is not open trade, it is managed crisis. Every tanker that passes is a small victory, but the risk hangs over every mile of ocean. The 2 weeks of talks ahead feel shaky. Diplomats smile for cameras, but privately, their words are sharper. Each side accuses the other of bad faith. Every negotiation session is tense, with walkouts always a threat. Iran wants guarantees. The US wants verification. Allies pressure both sides, but no one trusts a permanent solution is possible. Old grudges surface, minor incidents, a drone strays, a radio message is misheard, nearly spark new confrontations. Markets sense the instability. Oil futures creep upward as investors hedge against bad news. Asian currencies wobble, reflecting investor nerves about another crisis. The world hopes for a breakthrough, but prepares for disappointment. Everyone knows the cost of failure will be paid in dollars, jobs, and shattered routines. The Strait of Hormuz is the world's oil lifeline. 20% of global oil passes through its narrow waters. A closure, even for a few days, would send shockwaves through every economy. If the ceasefire fails, Iran could close the strait again. Warships would block passage. Oil tankers would turn back, anchored in safe harbors, waiting. Supplies would dry up in days, not weeks. Prices would spike instantly. Asia is especially vulnerable. Japan, South Korea, the Philippines, and Indonesia import most of their oil from the Middle East. Their economies would seize up, airlines would cut flights, factories would idle, and electricity grids would struggle. One decision in the Gulf can change daily life in distant cities. The strait's narrowness is matched only by the tightrope the world now walks. Imagine oil at $150 a barrel. In Manila, bus drivers line up at gas stations, worried about rationing. In Tokyo, the government releases reserves, but prices at the pump double. Seoul's factories cut shifts as electricity costs soar. Indonesian fishermen stay ashore, unable to afford diesel. Currencies tumble as investors flee risk. The Philippine peso, Korean won, and Indonesian rupiah weaken as import costs balloon. Central banks intervene, selling dollars and raising interest rates. Inflation surges, pushing up food and transport prices everywhere. Companies lay off workers to survive. Airlines cut routes, malls reduce hours, and factories cancel overtime. Families feel the pinch, school fees rise, savings shrink, and daily life grows uncertain. The pain is everywhere. From big businesses to small vendors, from city towers to rural villages, everyone feels the shock. In the Philippines, jeepney drivers protest in Manila's streets demanding fuel subsidies. School children walk instead of riding buses. Power outages hit provincial towns as oil-fired plants ration fuel. The government scrambles to negotiate new supply deals, but prices remain high. Japan faces its darkest energy test since Fukushima. Factories slash production. The public is urged to conserve. Lights dim early, and air conditioners are shut off. Supermarkets limit rice and vegetable sales as transport costs soar. The sense of crisis echoes across the country. In South Korea, headlines warn of a looming energy emergency. Small manufacturers beg for relief. Commuters crowd into trains as gas prices make driving too expensive. The government debates releasing more reserves, but anxiety grows with each new price hike. Indonesia's vast archipelago reels. Fishermen cannot afford fuel. Food prices skyrocket in Jakarta's markets. The president addresses the nation promising help, but millions feel the strain every day. Social tensions rise as the poorest suffer most. Across all four nations, ordinary life is transformed. The crisis tests governments, families, and entire societies. The world's peace and prosperity rests on fragile ground. A single blockade in the Gulf can ripple through millions of lives an ocean away. The ceasefire may bring a brief calm, but its cracks are clear. Realist theory reminds us, states act for survival, not trust. For the Philippines, Japan, South Korea, and Indonesia, energy security is not an abstract issue. It is the difference between light and darkness, jobs and layoffs, stability and unrest. The $150 oil scenario is not just a number, it is a warning. As the world watches the Gulf, every tanker that sails safely is a temporary victory. But lasting peace and energy security remain out of reach. The next crisis could come with little warning, and its cost will be measured in hardship across nations that depend on fragile corridors far from home. The lesson is clear. The world is more connected and more vulnerable than ever before. And for millions in East and Southeast Asia, the price of oil is the price of peace itself.